Let's move on and bring on board our first guest for today. We do have Dhruv Dhanraj Bahl, who is the founder and managing partner at Eternal Capital, joining in with us. Eternal Capital is founded and managed by him. And let's not forget, he was the former COO at BharatPe, and what this main reason that we have Dhruv going to be talking to us is that they have launched their maiden venture capital fund with a target corpus of around 120 crores. Now the fund also includes greenshoe option of another 120 crores, so that bringing it to the total capacity of 240 crores. But what are the plans of the company? What is his thought and vision, strategy? Let's bring on board Dhruv. Dhruv, very good evening. Thank you so much for joining in with us this evening. Let's start by talking about the target corpus that you have, right? So 240 crores around that. So could you talk to us about this corpus? What is the strategy and thought behind this?
Thanks for having me. The target corpus for the fund is a 120 crore fund with a 120 crore greenshoe option.
Now, what we also understand that the fund has already secured commitments from several of these startup founders. If you could just highlight or throw some light on which are these founders, which companies?
Yeah, so we've got commitments from several marquee operators. We've got people such as Sohail Samir, who's the ex-CEO of BharatPe, now he's running his own fund. Nalin Negi, the current CEO of BharatPe. Deep Kalra, the founder of Make My Trip. The founding team of SimSim, which was acquired by YouTube. Saurabh Ashish, Kunal Surri, and Amit Bagaria. We also have Vikas Gupta, who's the CEO of VLCC, and Adarsh Menon, the president of Zoomcar, to name a few.
If you could just talk a bit more in terms of your current portfolio ventures, some of them on that line, and what is it that you're looking at in these current ventures?
So we've, I've been an angel for the last 5+ years, where I've invested in nearly 60 companies. And the thesis that I had was to invest in great operators, building real world businesses. And so we've invested in companies such as AdmitCard, Bolt Money, Stupa Sports Analytics, Apni Bus, to name a few. So there are about 60 of them in our portfolio. Basic Home Loans is another star company run by a great operator that I'm quite proud of. So the idea is to back people with not just with capital, financial capital, but also bring social and intellectual capital to bear on our investments and help founders navigate sort of the early stages of building a business, and help them go from just being, a idea to an institution.
So, right, what are the metrics in terms of selecting companies then?
Great. I think when we look at what we invest in, we use three pillars in how we select companies. The first is we don't want to sort of boil the ocean looking at every idea. We have at Eternal a very clear understanding of what we think the next 5 to 7 years of value creation is going to be. So we look at those sectors, and within those sectors, we look at those portfolios. So, for example, if I'm looking at fintech, we're not too excited about the consumer side of the business, but we're extremely excited about MSME lending, loan against assets, and that could be in the consumer space, or SaaS companies that are maybe disrupting how wealth tech or credit and underwriting is happening in insurance or the credit sector. So what we first look at is the thesis that we want to go to, and we start talking to people within those theses, and especially operators in companies that are solving this at scale, because we feel that those are the best guys who come out and create great businesses. So the second thing we look at is whether that thesis gets backed by another one of our institutional partners. So we have a purely co-invest model. So we don't come in as a lead or the only lead. We do ensure that we have at least one more institutional partner coming in with us, taking the bet. It's a great validation of our thesis. Nicely put. We don't want to be overawed by our own intelligence. Someone else needs to put money where our mouth is. Thirdly, what we look for is what we call the Dhanda scorecard in some way. We ask very, very simple questions: who, what, why, and how. Who's running it? What are they? Who's running it and who is sort of building it? Second, what need are they addressing? Third, what kind of economics are they generating? Are you putting $100 and generating 5, or are you putting $1,000 and generating 5? Right? Really, basically get down to brass tacks of how does a business run? And lastly, we do look for traction in companies. So we don't really go on to the concept stage or the pre-seed stage. Those are not the kind of bets that Eternal takes.
What is normally the check size that you would be looking at, or giving? What is it that is there as a check size that one could watch out for?
So our check sizes range from between 2 to 4 crores. Our first check can range between 2 to 4 crores, and 75% of our fund is earmarked for that. The rest of our fund, that's about the remaining 25%, the remaining 30 crores is earmarked for backing 5 or 6 winners more deeply.
Dhruv, we've seen a lot of people who are actually quitting fintech startups, starting their own venture. Do you think that is something that, people will be focusing on? That's a new trend that is coming now. Is that something, and what is so interesting about this?
No, I think what you're seeing is operators come out and realize that they can actually add value. They can actually amalgamate their experience, that, as I again use the word, social and intellectual capital, along with financial capital, and actually bring it to bear, create a color of money that is more valuable than just investments from anyone else. And why you're seeing more operators exit is because actually, if you look at operator like VC firms, they tend to outperform their peers, right? You connect with founders better, you connect with the problem better, you find more real world scenarios. They are more sort of both, 36,000 feet ready. They look at the big picture, but you can also get into the plumbing in the basement and fix it with the founder, because what you're trying to bring to the table is a more practical and a more real world solution. And that actually helps sort of get early successes. Now, very simply put, if someone makes less than average number of mistakes, they tend to get higher than average returns, right? So if you just help founders navigate those challenges, those problems better, and because the founder is willing to listen to you because of your operator expertise, automatically the first inertia of trust, is sort of broken out. You've reached that point where a founder is willing to listen to you. So I think that's why you're seeing more operators become angels, and today you're seeing more operators become VCs, because you also start seeing that there is a need to sort of institutionalize and organize the early stage investing sector, and that's why you're seeing a lot of great sort of ex business leaders step out and create pools of capital through VC funds and deploy them into great businesses.
If you like this video, then like, share and subscribe to ET Now.